Today, we're doing a full deep dive into one of the most popular ETFs in the world, the Invesco Nasdaq 100 ETF, also known as EQQQ. This is actually my biggest holding as an 18-year-old UK investor, and for good reason. In this video, I'm going to explain what the Nasdaq 100 actually is, what companies are inside EQQQ, why this ETF has grown so much, the risks most people forget to mention, and whether it makes sense for beginners. If you invest through Trading 212, Freetrade or Invest Engine, this is one ETF you'll definitely want to understand. The Nasdaq 100 is an index made up of the largest 100 non-financial companies listed on the Nasdaq exchange. So it doesn't include banks, instead it is dominated by technology, consumer services and communications. Some of these companies inside include Apple, Microsoft, Amazon, Nvidia, Google, Meta, Tesla, Broadcom and Costco. These companies are some of the most innovative businesses on the planet, and many of them have dominated global markets for almost 2 decades. The Nasdaq 100 is known for being tech heavy, meaning it tends to grow faster than the overall market during good years, but also drops a lot harder during corrections or interest rate hikes. So, what actually is EQQQ? EQQQ is simply the UK investor-friendly version of the Nasdaq 100 ETF. It's created by Invesco and it's designed to track the Nasdaq 100 as closely as possible. A few important things to know though. The ticker is EQQQ. The provider is Invesco. The expense ratio is 0.3 and it is UCITS compliant, which is important for UK and EU investors. It's available on platforms such as Trading 212, Freetrade, AJ Bell and more. There are accumulating and distributing versions. Most UK beginners pick the accumulating version, which automatically reinvests dividends for you. EQQQ is also fully backed by physical replication, meaning it owns the actual companies and not derivatives of them. EQQQ is incredibly concentrated at the top, which can be good or bad depending on your investing style and risk tolerance. Let's look at the approximate weights currently. Apple is around 8 to 10%, Microsoft is also around 8 to 10%, Nvidia sits at about 6 to 8%, Amazon 5 to 6%, Google, Class A and C combined, is about 8 to 10%, Meta 4.4 to 5%, Tesla 3 to 4%, Broadcom 3 to 4%. Just the top 10 companies alone can make up over 50% of the entire ETF. This means two things: extreme growth potential, because these companies innovate fast and dominate huge markets. It also means higher volatility, because if big tech drops, the whole ETF drops with it. This concentration is exactly why EQQQ has outperformed many other ETFs long term. But it is also why 2022 was one of the worst years for tech heavy investors. Now, past performance doesn't guarantee future returns, but it's still important to look at it. EQQQ has historically delivered very strong long-term returns. Over the last decade, the Nasdaq 100 has massively outperformed the S&P 500 and most global markets. For example, the Nasdaq 100 has grown over 300% in 10 years. The S&P 500 has grown around 180 to 200%, and many global ETFs grew less than 100%. But why is there so much growth in the Nasdaq 100? Because companies like Apple, Microsoft, Amazon and Nvidia have completely reshaped our world as we know it. These companies benefit from software growth, AI, cloud computing, e-commerce, advertising, data, GPUs, smartphones and digital transformation. The market could slow down or tech could have another correction, but long term, innovation tends to grow. Now, why do investors love EQQQ? There are a few reasons why EQQQ is one of the most popular ETFs for UK beginners. Number 1, it's a simple way to invest in big US tech companies. Instead of buying single stocks of Apple, Amazon or Nvidia, you get everything in one ETF. Number 2, high long-term growth potential. Tech grows faster than the traditional sectors like banking or utilities. If you're young, like me at 18, growth can be a huge advantage over decades. Number 3, strong past performance. Again, it's not a guarantee, but tech has dominated for the last decade now. Number 4, great for beginners who want exposure to companies they know and understand. Almost everyone uses products from Apple, such as the iPhone, or Microsoft, such as Windows for desktop. This familiarity makes the ETF feel a lot less intimidating. Now, what are the risks of EQQQ? It's important to understand this. Number 1, it's extremely concentrated. Over 50% of the ETF is in just 10 companies. If big tech struggles, EQQQ will struggle as well. Number 2, higher volatility. In 2022, the Nasdaq fell around 33%. Meanwhile, the S&P 500 fell only 19%. If you panic when your portfolio drops, this ETF might be too aggressive for you. Number 3, it is considered expensive compared to some ETFs. An expense ratio of 0.3% is not the cheapest fund out there, but it's still reasonable for a tech-heavy ETF. And number 4, it's not ideal for dividend investors. Most Nasdaq companies reinvest profits instead of paying out a dividend. This ETF is for growth, not income. Why do I invest in EQQQ? As an 18-year-old investor, EQQQ is actually my largest holding, currently over £1,000 of my portfolio. I invest in this because I believe in long-term high-tech growth. I invest in it because I believe in long-term tech growth. I prefer simple investing. I don't want to pick individual tech stocks. I want exposure to AI, cloud, chips, advertising, e-commerce, all through one ETF, and I'm young enough to handle the volatility. For me, EQQQ is a core part of my long-term strategy alongside broader ETFs. Now, should you buy EQQQ? This part is important. It's not financial advice what I'm saying, but here's a simple way to think about it. It might be right for you if you're young, you like investing in companies you'll know, and you're okay with volatility. But it might not be right for you if you want dividends, you hate big drops, and you prefer balanced, low-risk ETFs. Thanks for watching this deep dive into the Invesco Nasdaq 100 ETF. If you want more breakdowns like this, let me know in the comments. And I'm curious, do you invest in the Nasdaq 100, or do you prefer something such as the S&P 500? Let's talk down below. Don't forget to like and subscribe if you've enjoyed the video.